oil prices are bouncing a little bit anyway this morning after plunging 24% yesterday. That was the worst one-day percentage drop since 1991. Remember, that was, I think, the first Gulf War. Following the failed OPEC, I remember it, following the failed OPEC deal. I remember exactly where I was. It sparked a price war. Joining us now on the Squawk Newsline is our own Brian Sullivan. And Brian, we were just talking earlier about, whether the key players here all have something to gain by maybe not being quite as, as dogmatic as what we saw yesterday. You think that MBS and Putin finally come to some type of understanding, Brian, or we're on our own here?
I think for now we're on our own, Joe, and good morning, everybody. I mean, whether or not the two sides come back together, I know the Department of Energy put out a statement yesterday late, basically blaming foreign actors for what's going on. Obviously, I think that was a jab at Russia. Remember, we've got sanctions on Russia's Rosneft, which is run by Igor Sechin, who is Vladimir Putin's bestie, and so maybe this is a payback to us. They know how weak U.S. shale is, guys. They know the debt levels. They know that the majority of all new wells drilled in the last couple of years are done at a loss. You couldn't drill a well now unless you're one of the big boys. Exxon, Chevron, Occidental, and a few others could probably break even or make a little money on a new well now in the Permian, but almost nobody else can. I think they know that. But you got to also remember, there's the demand side. I mean, we can do whatever we want on supply. OPEC and Russia could come back together and dance around the fire pit in the maypole and come to a conclusion. But if people slow down driving in the United States and China because of what's going on, then global demand is going to fall a lot faster than anything some deal could do.
So we're going to be talking about it all day. A 50% retracement, Brian, what would you, where do you think this finally settles? Because that seems like a bit of an overreaction yesterday. You think we settle somewhere in the low 40s, or we're really going to be down here in the 30s again for a while? Well, Joe, if I knew the answer to that, then I'd be just coming on as a guest all the time. Although, listen, who knows? I heard Eunice, and she goes to Wuhan. Okay, I look at this traffic congestion indicator from the GPS company TomTom. It's just one indicator, and I'll post it up after the interview's over. Nobody's driving in Shanghai and Beijing on the weekends. You can see that from traffic data versus last year. It's like they're going to work, but they're not doing anything on the weekends. Seattle is down 12% or something like this from last year's levels. I drove home last night. I do the same commute every night, same time, same roads. And anecdotally, traffic seemed to be down. It could be spring break, who knows, Joe. But the reality is if demand falls and we don't have a sharp and sudden reduction in output in the United States, then I would say we're going to go to the high 20s, mid to high 20s. Please. And I hate to say that. Dan Pickering, energy executive, put out a great piece yesterday saying value over volume. Joe, that people I talk to estimate 40% of every barrel we pull out of the ground in America right now is at a loss. 40%. Imagine if you sold 40% of your hamburgers at a loss, 40% of your Volvos.
Including Brian, right, all the shale?
There's no shale that's been drilled in the last couple of years, with the exception of the names I mentioned, Chevron, Exxon, Occidental, and maybe Pioneer in some cases, is profitable. None.
Hey, Brian, listen to this. So, and then I'll ask you where we really need to focus our attention, whether it's dividend cuts from some of the big majors that are pretty well capitalized, probably. They'll survive, or whether we worry about all the smaller players that may go out of business because of all their debt. Both of those are things to worry about. But listen to this. The Russian Energy Ministry called a meeting with oil companies on Wednesday to discuss future cooperations with OPEC countries. Quoting, we plan to discuss whether to return to cooperation with OPEC or not. And that's happening today. Maybe they're getting the message, or maybe is that a glimmer of hope right there that they're going to talk?
Yeah, I think so. They could be floating it. Listen, it's like I said earlier, everyone's punching each other in the face, and nobody's winning. No one's going to have their hand up in the ring at the end. Saudis need 80 plus a barrel. The Russians can print money. See, the difference is, of course, the countries
can print their own money and devalue their currency and sort of live on budget deficits. Companies have been living on debt that's owed by somebody else. And, of course, yesterday, the heaviest indebted companies got hit. You said dividend cuts, probably capital spending cuts. They're going to have to come. It's going to be a lot of jobs lost, tens of thousands, maybe more jobs lost because you can't complete these wells. You can't complete these projects. There's 22 liquefied natural gas projects that are in some form of construction, production, projection, whatever. Those are going to some of those are going to have to be taken off the books unless there's a major turnaround. And you know, listen, it's math, right? I mean, Exxon, Becky, I saw your great interview with Darren Woods. Exxon stock has fallen 50% basically in just over a year, which means it basically has to double just to get back to where it was. It's going to be a painful period for the remaining investors that are left.
Yeah, the yield for ExxonMobil at this point is 8.3%. Yield for Chevron, 6.3%. And I guess how long oil stays this low is going to have some determinant on how these things play out.
Well, it's up 12% right now, I guess, maybe on that little kumbaya moment that Joe just mentioned.
Yeah.